This is Matthew Cratter from Trader University, and today I want to answer the question, will gold crush stocks? In other words, which one is going to be a better investment over the coming 5 or 10 years, gold or stocks? If you're interested in learning how the economy actually works, how the stock market works, you can make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So what I've done here is I have a monthly chart of gold, and these vertical lines represent the beginnings of new decades. So we have the 1990s here, beginning the aughts or the 2000s, 2010, and then the dreaded 2020. And what we can see is that gold seems to alternate between periods of outperformance and underperformance. So the 1990s were a period when everyone was into stocks. Everyone was buying blue chip stocks and new internet stocks. People called gold the dirty yellow metal. And at the same time, we had all the central banks dumping their gold. We had famously Gordon Brown, Chancellor of the Exchequer in the UK, dumping gold at sort of 20-year low prices. And then what happened is there was an agreement on gold. It's called the Washington Agreement on Gold that took place in 1999. And it was sort of a truce between all the central banks, mostly the European central banks. I guess it was almost the ECB at this point. And plus Sweden, Switzerland, UK agreeing to not dump as much of their gold to limit their annual selling. And so what happened then was we had a decade of very strong gold prices. Now this was sort of the rise of China on the world stage as an industrial power. They were buying gold, obviously. We also had a very nasty bear market in stocks in 2000 to 2002, as well as the great financial crisis in 2008. So this was sort of a troubled decade. It was sort of a sideways decade for the stock market. But what it meant is that gold, after a bad decade in the 90s, had a very strong decade in the 2000s. Now gold really peaked, didn't quite peak right at 2010. It peaked right as the European debt crisis, the EU debt crisis, was being resolved. Call it 2012, 2013. That's when things finally stabilized in the EU. Obviously, it's a simmering problem. But gold really did have this amazing run from, call it 1999 to 2013. And then gold again entered a sideways market after that, really until 2020. And this is the era, the 2010s, obviously the era of the outperformance of the FANG stocks, outperformance of the NASDAQ, etc. against gold. So this is the sort of decade pattern, and it would make sense because if people get very excited about something for 10 years, there's got to be some sort of mean reversion or at least sideways reversion. The 2000s, that first decade, were also a very troubled time. We had this September 11th attacks at the sort of the beginning of that decade that really led to all these overseas wars for the U.S., the war in Afghanistan and Iraq, etc. And then a little more peaceful time from 2010 to 2020. And now it looks like with the new decade, we're off to the races just in terms of geopolitical tensions, sort of the continuing rise of China, its fight to become the world reserve currency, have the yuan become the new world reserve currency. And obviously we've seen all the stuff that's been happening with the various embassies and consulates and Trump threatening to shut down TikTok and all these different things. So this is the basic pattern, and this is one reason I'm so bullish on gold over the coming decade. So I think stocks are going to do really well. What's basically happening is the US dollar is being devalued against everything. The Federal Reserve is printing a lot of dollars. We've talked about this a lot, and the money supply has been shooting up. They're buying assets and putting it on their balance sheet. And what this means is that everything's going to go up in dollar terms. I'm a little more agnostic whether the dollar will underperform or outperform the euro or the yen. But what this does mean is that U.S. real estate prices should go up, gold prices should go up, stock prices should go up, Bitcoin prices, etc. Everything will go up simply because the dollar is going down. And so apropos of that, we got a very interesting signal recently. What I have here is a weekly chart of gold denominated in the S&P. So it's basically gold, the price of gold divided by the price of the S&P 500. These are weekly bars, and I've attached a 50-day moving average, which is the blue line, and a 200-day moving average, which is the red line. And so when this chart moves upwards, when it moves this way, that means that gold is strengthening against the S&P. When this chart moves down, it means the S&P is strengthening or outperforming against gold. And so we can see the last time we had a moving average crossover, what you'd call a golden cross, was back in, let's get the exact date here, it was roughly November 2001. We can see the little spike here in the wake of the September 11th attacks in 2001, and that really reversed everything. We obviously had the Washington Agreement on Gold back here as well that really eased the pressure on gold. We had a beginning of a bear market in stocks, etc. So if we scroll out, what we will see is that this was a very good indicator for a large bull market in gold versus stocks. So if you're long gold, short stocks, we're basically betting that gold would outperform stocks. Now you can also just do it by being long gold. That's the chart that we have here, where gold over this decade, really until 2013 or 2012, does really well. So that's one way to play it. But this is a nice indicator just in terms of the relative outperformance. So we got this moving average crossover in 2001 right here. It marked the beginning of more than a decade of stronger gold prices versus the S&P 500. And then we can see that we got a reversal in roughly April of 2013, when this line, or maybe it's sometime in April of 2013, when the blue line crossed below the red line, and this really initiated 7 more years of very strong stocks versus gold. Again, when this chart is moving down, it means the S&P 500 is strengthening against gold. Now, the reason I'm showing you this chart is we can see that we had a massive reversal here in the beginning of 2020. And it really didn't take long. It looks like it really started even before COVID picked up in the U.S. Obviously, international buyers were seeing it happening in Asia, and the S&P began to weaken, gold began to strengthen, and now we've had another crossover after basically 7 years without having a crossover. So this is a very big macro trend. We can see that the 50-day moving average has crossed above the 200-day moving average, and what this suggests is that gold will outperform stocks, particularly the S&P 500, for the foreseeable future. Call it for 5 or 10 or 12 years, something like this. Now, this makes a lot of sense. As we said, there are geopolitical tensions with China, with Russia, etc. We have a lot of uncertainty going into the November elections in the U.S. We have a lot of social tension, a lot of wealth inequality, etc. We also have these very, very powerful FANG stock companies and a lot of rumblings of antitrust movements against them. Obviously, the FANG stocks have been outperforming everything, and they're reaching the point where they just almost have too much control over the market. And so the pendulum would seem to be swinging more toward possibly breaking them up. And if you look at the S&P 500 is something like 25% or 30%, these FANG stocks, these very massive mega cap tech stocks. So all of this is to suggest that I do believe stocks will continue to go up simply because the dollar will go down. I wanted to show you a chart of stocks in Zimbabwe. A lot of people don't realize that the stock market basically always goes up, even though Zimbabwe is, you could call it a failed state. Basically, it's up 653% since the beginning of 2020. Now, this is not as exciting as it sounds, simply because when you convert this back into US dollars, what you find is that this Zimbabwe stock market is simply going up because its currency is collapsing even more rapidly. So you can have a situation like that. And I think this is similar to what's going to be happening in the US, where stocks will go up, but they will not keep pace with the devaluation of the dollar. And the only real way you'll keep pace with that is if you're long gold or long Bitcoin. I expect Bitcoin to massively outperform gold. It's starting from a much lower base, much smaller market cap it's basically digital gold. It's what's coming down the pike, and it's what the new generations want to own instead of gold. That being said, gold still has this 5,000-year history. And you can think about it in terms of scarce assets outperforming paper assets or financial assets. So massively bullish on gold, even more massively bullish on Bitcoin. And I think this golden cross is a very good indicator of what we're in store for this decade. Geopolitical tensions, probably war before the end of the decade, some sort of either a Cold War or a hot war, hopefully not a hot war, and just basically devaluation of the dollar versus real assets like gold and Bitcoin and real estate, and stocks continuing to perform well, but just not being able to keep up with the devaluation of the dollar. Just like Zimbabwe stocks were not able to keep up with the devaluation of their local currency. So I think it's very helpful to look at when you're thinking about your asset allocation. A lot of people now are going to be very overweight the S&P 500 or the QQQs or the NASDAQ, not realizing that they're sort of fighting the last battle, and that the battle of the 2020s is really going to be gold and Bitcoin outperforming stocks. And I think this moving average crossover, this golden cross, is a really good indicator of that. Let me know your questions and comments in the comment section below. Be sure to hit that subscribe and like button. And if you hit the subscribe button, be sure to hit the bell, the notification, so you'll be notified when my next video is published. Thanks a lot for listening, and I'll see you in the next video.